Hello and welcome to Donatien Investment. This analysis is for Alimentation Couche-Tard on the Toronto Stock Exchange as of 15th of August 2026 with a share price of 91 Canadian dollars 96. The full report is on Donatien.ca. Warranted 65 is exactly the high band threshold, and clearing it by 0.3 of a point is what keeps medium and long at buy. The short is capped pending technical confirmation. The most important thing that happened to this name this cycle happened inside our own report. A pre-publication audit found that the 25th of July report scored several business quality sub-signals on fourth quarter same-store figures while labeling them full year, and recorded net debt to earnings at about 0.8 times when the company's own disclosure was 1.99 to 1. Headline revenue growth had been drafted at 10.5% when the actual full-year figure was 5%, and the period error reversed the regional story. On the full year, Canada was the strongest region at plus 2.3%, not the weakest. The bridge is worth walking because a 17-point move in the pillar that gates the signal deserves to be shown. The same-store sub-signal falls from 80 to 54 on the period correction. The balance sheet sub-signal falls from 85 to 60, most of it correcting that leverage figure. The moat falls from 70 to 58, which is a genuine method correction rather than new information. The sub-scores are now derived from the competitor read. And note that applying this report's weights to the prior report's own published components gives 77.9 rather than the 82 it printed, so about 4 points were never reconstructible. 65 is the high band threshold. This clears it by 0.3 of a point. Underneath the correction, the operating year was solid on margin and soft on volume. United States fuel margin reached 52.44 cents a gallon in the fourth quarter against 43.27 a year earlier, and a flat to falling wholesale crude trend expands that spread for a retailer. Full-year same-store merchandise grew 1.9% in the States, 1.4% in Europe, and 2.3% in Canada. Against that, same-store fuel volumes fell 1% in the States and 2.2% in Europe, the slow structural drag of electrification, and it does not reverse. Circle K's American store count grew while 7-Eleven's fell, but the specialists take food service traffic in contested cities. The bear is the one combination this business model cannot absorb, margin and volume compressing at the same time. August consumer data proves to be the start rather than a wobble. Merchandise comparable sales go from plus 1.9% to negative. Fuel volumes fall faster than their 1% run rate, and cents per gallon mean reverts toward 43 as crude re-spikes. Alongside it, the competitive leg, the specialists keep taking food service traffic and comparable sales stay below 1%, which would confirm that the switching cost weakness is real rather than theoretical. And the quality trigger is unusually close. A deterioration in the revenue trajectory sub-signal takes business quality below 65, which moves medium and long to hold on the framework's own matrix. $78 is minus 15.2%. Now weigh the risk against the reward. The bull case is roughly 26% above today, the base case the most likely about 11%, and the bear case a fall of about 15%, so you are risking about 15 to make 26. So, our call on Alimentation Couche-Tard on the Toronto Stock Exchange: hold short term, buy medium and long. Remember, this is for education, not financial advice. Always do your own research. This analysis is by Donatien Investment at Donatien.ca. The link to the full report is in the notes below. Have a great day.